Alright, let's try this again. It's Nick, guys. Thanks for being patient with me. Still new to YouTube, trying to figure out all these stupid kinks with OBS and compatibility, file size, everything like that. It's just the easiest way for me to kind of get information out there and give you guys my viewpoint. As always, like to start off, I am a financial or a licensed professional in this field, meaning I have my Series 7, 63, and my SIE. I'm not a licensed financial advisor, but I do have experience on the desk with TD Ameritrade, and just some general market dynamics that your average YouTuber or just individual doesn't necessarily have. Maybe they've acquired through a skill set, but I do just like to give people my backdrop in regards to that. Just know it's not financial advice. This is just simply my opinion from an educated standpoint in regards to where we're currently at with AMC and some micro dynamics and sentiment going forward. So, like always, invest for yourself, invest what makes sense for you, manage your risk tolerance appropriately, and just know that with a situation or stock like this, obviously we can project it, increase our probabilities, but it's never guaranteed. So I never want people to kind of over leverage positions or play deep out of the money weekly calls and trying to time this thing. Just because, one, it gives the market makers plenty of premium to just kind of pocket and use against us. Same with the hedge funds, like obviously they're all in bed with each other, so it comes to a point where you really have to be strategic with your investment choices. Because last week, like the 35s, I believe it was had like 250 million in premium paid for those, so that's just going straight to the market makers' pockets. Because at the end of the day, the market makers are also in this to make money, and they have quarterly incentives in order to get commission and everything like that. Just so you know, like, be smarter with options. I think that's one thing that the full retail kind of crowd can learn from and kind of reapproach, because if you're strategic with them, meaning playing $1 to $2 out of the money or even in the money options for that week, like, you're gonna find yourself being much more effective in regards to return on investment, kind of stress as well, and just understanding how options fully work, because everyone just swings for the fences and then gets upset when a projection doesn't hit, but they grabbed a $10 to $20 out of the money call and wondering why they don't have anything left to show for it. So just to start off with that, I like to clear the air there, because options, they are leveraged positions to gauge directional movements of an underlying stock. So here, I just want to pull this up, give you more of a macro viewpoint. These are Heikin-Ashi candles, so just a little bit more in depth in regards to that, rather than your standard candle. Heikin-Ashis, they're based on your high, low, open, close, and different kind of characteristics that allow them to basically project more of a trend within the stock based on the time frame of the candle you're using. So this is the third time I'm recording this, so I'm kind of going through it a little bit quicker here. But to get into it, I just want to show you these Heikin-Ashi candles and kind of what it's shown me from a weekly standpoint, because I haven't got a chance to kind of talk with all you guys yet. Clearly you show your strong downtrends, or when you get your big body candles at the top with a wick underneath, shows the downtrends continuing. With your ESD bands, so these are your exponential standard deviation bands, they're similar to Bollinger Bands, but no, they're not the same, meaning these don't necessarily compress to reflect tension. In turn, what they do is they give you a standard deviation based on exponential data, meaning it's tighter to the stock price, the candles underneath, and it just shows directional sentiment a little bit better. So anytime they get pierced, that's usually indicative of a trend reversal starting. Anything above your center ESD band on any time frame shows that you kind of have momentum to the upside or the downside, depending on how you're playing it. And then you overlap that with your 50-day exponential moving average. This is just kind of a strat I've been using both on a momentum intraday, also a key momentum on a macro standpoint. But what's really intriguing here from last week is this is called a trend reversal Heikin-Ashi candle, meaning anytime you get a candle with a body in the middle and your wick above and below, that's indicative of a trend reversal. So this one obviously isn't super strong. You can't even see the volume down here. No one was kind of in the play at this point. Maybe some of you were. Congrats if you were. I entered on January 11th of 2021 and kind of built out a strong position from there. So what's most intriguing about this is we had these strong body candles to the downside on the Heikin-Ashi. Should have got a strong reversal here to pop us out, and we really should have got one here, but with markets and them also breaking the macro wedge, they were able to push it down further. But then we got this kind of doji candle, indecisive weekly candle on the Heikin-Ashis, but we did break out of the macro trend there, so that kind of forecasted what I mentioned last week, that we were going to get some good upside, which we did. We got up to 1664 on pre-market, I believe, on Tuesday. And then they pushed us under the standard deviation line, tried to push us underneath the macro wedge, but we kind of caught this fulcrum point here. So this weekly candle from last week is super intriguing. What I'm looking to see from it is something similar to this movement here, or if you notice down here, we kind of got this similar candle, got this one here and pushed up. This one, you could make the argument that it could potentially be this week, but with this sentiment and current kind of dynamics in regards to the EO, the Evergrande situation going on, along with just Russia kind of trickling over and assets in regards to that, along with prime lenders being overextended and your QT, quantitative tightening. I truly believe that this style here is very, very, very similar to what this is here. Meaning this candle, if you look at it here, this is kind of your 34 run. Well, let me take a step back here, because when we get more into the daily, it'll make more sense. But we'll kind of jump into the daily candles here now that we're on the topic, just to show you a better picture of kind of what I was talking about in that tweet I had prior to this. And you can see it on the Heikin-Ashi a little bit better. It's just going to appear more extended. So if you zoom in here, what's really intriguing is, give me a second here. So here's kind of your M-style movement that you had here. M-style movement, got dragged down, a little bit of a wave up, and then you shot up. So this is kind of your equivalent of 34. Obviously it's different, like this 34 is much stronger. Well, we broke a downtrend on a macro standpoint, and we got the crossover with the 50 EMA. So this explosion is just a different setup. It may not look as big, and people are saying, oh, well, it doesn't make sense. Well, if you think about it, this kind of downtrend here is basically this big movement right here. So with this M style, you got the move up to 34. They wrote it down, a little wave down underneath. Here's the same thing, just a little bit more stretched. And then you get a bit of your W action here, bottom, bottom, and this is kind of our breakout up to 1664. But what's happening here is your schematic is sped up. And I mentioned this before. It's where your schematic is sped up, so maybe two of these are broken down into one. So we got this push up, and we got the downtrend here. Got our 3 Heikin-Ashi daily candles, and then this is kind of what I'm expecting tomorrow. Nothing too crazy, but now on the daily, it'd be nice to get a Heikin-Ashi candle with the green body in the middle, wick above, and a wick underneath. So to get into that, and for it to make more sense, I'll kind of show you the 180-day 4-hour candles here, because these are what really intrigues me. Give me a second here. So when we zoom in, I'll just keep it on Heikin-Ashi just because it shows the trends a little bit better. And there's where you get that M movement with the exaggerated right side of the M. You got your flare up into the micro or macro wedge. Then you get your crossover here. So the movement on the tape is usually delayed, and then that's when you got your big movement, consolidated, but we stayed above this ESD band, broke our macro wedge, and then really took off after testing it once. And then we all know what happened here. Don't need to explain it again. Got the downtrend. This crossover concerned me, but I really thought we'd kind of continue to ride this macro and press back up here. Like, this is where I thought the next breakout was happening. Of course, they flushed it down. We got a huge downtrend in the market, and then they just poured it down to the bottom. And then this is obviously where Citadel had their little tweet, had their little fun, and I think what they were doing here was, one, there's a micro cover, but they were also kind of just shaking up the 8 ball, essentially, keeping retail guessing. So we got a push off of it, continuation, stayed above the ESD band, push up, pressed up here, so kind of similar to one of these wicks up. And then I think they just really wanted to trap premiums, especially before that big monthly expiration on 520, because they shot it straight down. Like, this is where we should have had a crossover here. But of course what they did was they saw the same crossover, I'd imagine, and didn't want that taking place before 520. Because if you zoomed in here, you can kind of see what I'm seeing on the 4-hour. This crossover here was just about to take place, and they had that massive sell-off at open to push us into this downtrend, and it goes down. You can kind of see the stairs. It's just funny how obvious this is. But this kind of bottoming out here is very important and intriguing to see, because it got us back over, got the crossover on the 4-hour. This was my confirmation cross. Then we broke the macro trend, pressed up here, but when we pierce these bands, it needs to come down and consolidate a bit. So I expected this downtrend. I thought we would have caught better here and really started moving up last Friday. So that's kind of where my zone of strength started. Was unfortunately probably a day or two early. Was on 6-1. And then we got the second day, which was nice. That's exactly what I was looking for. And they rolled it back under with the short week. But they still haven't got it underneath the macro wedge, which is very intriguing to me, because if you think about it, I think I already mentioned it, they have the executive order, was last Friday. Well, that's never going to be a one-day thing where it's just a Thanos snap and then all the collateral goes down to nothing. Well, essentially, with anything, it takes about 2 days for this to roll into the market and also roll into creditors, lenders, FINRA. They usually give everyone your 2 to 3 day grace period. Obviously not retail, but they give them that grace period to basically reallocate their books. Allows prime lenders who lent out plenty of shares to start increasing their cost to borrow. That's kind of what you noticed, honestly, here, is when our cost to borrow really started jumping back up. And now we have the EO, we got the QT, quantitative tightening, we got Evergrande confirmed by Citibank that their assets are now worth nothing, meaning they can't be used as collateral. Quantitative tightening, executive order, what else am I missing here? I feel like there's one more thing. Anyways, we have all these different pulling of liquidity from the market and basically pulling risk off. So that's why it's been so easy for them to exaggerate these movements, is without liquidity, it's easy for them to drag the stock down. Well, usually within the 2-week time frame of a monthly option expiration is when you start to see your liquidity enter, because they're wanting to kind of get their books right for month end for that standard expiration. And we have a FTD expiration, one of the 3 for the year, on 6/17. So with how the chains are set up, our IV is looking very good for this week. Highest on the chain right now. For the 10s this week, our volume's looking decent. Call put ratio usually 3 to 1 or 2.5 to 1 every single day. So I love to see that. You got your delta and your gamma also staying higher on the call side versus the put side, which is indicative of demand. And also market makers needing to hedge their books even harder, especially with gamma being up here. Gamma staying up, which is good. And Theta is dropping a little bit, which is also good, but these option expirations are basically, from a Greek analysis, getting to a point where it's a perfect storm for a short squeeze. So with the delta continuing to increase, it looks very promising for this week. For tomorrow, as I mentioned, nothing too crazy. I'm expecting more of like a 60 to 75 million in volume on the equity side of things, and a close up above 13 to probably 13.20 to 14, maybe higher if we get a nice Monday push and markets are green. If markets are green, then it's a strong day. I think we can easily push anywhere from 14 to 16.40, 16.30 range. But I'm expecting more of a consolidation tomorrow. What I do want people to be prepared for is they're going to try and press this underneath the macro wedge one more time, in my opinion. So if we do get that out the gates, just expect a dip down towards 1190. I'm just going to be honest, maybe even 1170, 1175 range. It should catch on this macro here and kind of hold us up above, but they're going to try and get this crossover completed. But what's going to happen is going to be something similar to this, but opposite, to where we blipped above, should have had it. They'll blip below, but then I think afternoon-wise, if we are still below this macro in the afternoon-wise, it may blip below, but we'll get a strong push to kind of have them close with the standard deviation line still above the 50 EMA. And then coming Tuesday, Wednesday, Thursday, it's going to get very volatile in a good way, in my opinion, because Tuesday is when you should see the effects of the EO hitting, along with the Evergrande stuff, or at least by end of the week for Evergrande. And then basically liquidity is going to start stepping in leading up to this monthly expiration. So I'm expecting big movements this week. Potentially a low of 1190, 1175, and then Tuesday, Wednesday. Once we break the 1640, I think you guys are going to be very surprised on what's on the other side of it, because the 1640 mark has been pretty key for us historically, to where that's usually when we get our biggest movements, at least from a trend reversal standpoint. You'll notice here the 1640 mark was kind of what the tipping point needed to push us up to 72. So I don't want to call squeeze quite yet, but if we press the 1640 and break it with strength, and then press the 22.5 and maybe consolidate between 22.5 and 28.5 just because the VPR is low, we're setting up for this squeeze to happen within the month of June. If it's set up right, because once we break through this 50 EMA and the ESD bands, we really only done that once on the daily. I mean, we got it here, and that's what led to that, but of course, they planned all of this, in my opinion. But it's getting to the point where they don't have the collateral to hold these short positions, to where something's going to give, and they're going to have to cover. Like, OBV hasn't dropped at all. So, with that being said, I want to keep it short. I know it's getting late. I don't want to record another one of these, so hopefully this goes good. But as always, I'll be in Rico's Discord all week, kind of helping the guys out, just showing what I'm seeing. I'm looking to hit a couple other runners outside of the meme stocks, and kind of start changing the dynamic there, because I do want people to know there's plenty of other positions to be hitting runners on in the meantime. But there's a lot of momentum within these stocks as well to make some good money. So, as always, approach your risk-reward ratio along with your risk profile to needs that fit you and you alone only. Put food on the table, make sure your family's getting fed. I don't want you guys over-leveraging and basically stressing this play, because in my opinion, the play's already written. Like, we're going to squeeze. It's just a matter of if the setup is right with the market dynamics, the chain is primed, which all these are basically in the right position, but there are a few hurdles we got to get past first before we're into the full clear. But it's close. Like, it's close. Like, I think we'll be back into the 34 range conservatively by 617. So I'll update you guys some more on that going forward. Like and subscribe. Leave a comment if you'd like. And yeah, let's get this week started off strong. Bing bong.